Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, as you can see, it was a very whipsaw price action overnight. After the US attacks on Iran, traders rushed to safe haven assets. However, pushing the Australian dollar to the 1 month low, it soon quickly found demand where the 60-day simple moving average and rejects that level, and as you can see now has staged a very strong response to a bullish case that could see a move now on towards 65 figure 45 where all these tops are, and a rejection. So still trade carefully and still remember there is still much volatility ahead of this week. Having seen Fed Governor Bowman's dovish comments on inflation and potential July rate cuts have weighed on the US dollar, which helps support the Australian dollar, as the dollar index, which measures the greenback strength against a basket of 6 major currencies, dropped from 98.60 to now 97.80. Beyond the geopolitical risks, investors will also focus this week on the US inflation concerns that's driven by tariffs. With May's personal consumption expenditures, the PCE index, which is the Fed's preferred inflation gauge, is due out Friday. Along with that, we get GDP and also we get updates from Fed speakers, and keep an eye on Federal Reserve Chairman Jerome Powell's speech to Congress. The market will be focused on how Jerome Powell will answer criticism from President Trump. While back home in Australia, the upcoming CPI update follows with a previous reading of 2.4% in line with forecasts. Looking at the technicals, as I mentioned, I'm still looking for a move up towards 64.90 to 65.40.45 where this top is, and any pullback likely to be brief. And still keep an eye on their 60-day moving average. No doubt bargain others are still lurking from there. The euro also saw a very strong surge just in front of that trend line and posted an engulfing candle, which could follow on now onto 116.65 and maybe even higher to 117, maybe 118. The bullishness has strengthened, so let's see how we go from the current pattern. And any pullback likely to find support around 114.80, and this trend line still roughly around 114.25 to 35. A surge in dollar yen, well, the market found a bull trap quite close to that 148 level and plummeted, and now back on course for a potential downturn, that is to 142. Keep an eye on 144.80 as this may trigger stop losses from the given bull run and caught from the bull trap, therefore could fuel the move, as I mentioned, to that bottom side and reassess from 142. A strong move in sterling, an engulfing candle that could see further to the upside and look towards the region of 136.15 to 137. I like this pattern, and especially the fact all the markets are respecting these trend lines, so no doubt any weakness will be brief. A weaker play when it comes to gold, and therefore could see a move down towards the region of 3,333 to 35, given the fact that we've broken 3,350 with stops likely to be triggered. If so, then from the bottom side of the range, I do expect to see a very strong rebound and maybe back towards that top side of 3,400 or the all-time high at 3,500. Keeping a very neutral stance, as you can see from oil, we've got a doji in place in terms of bullishness. But where it's placed, if we get a close and an open the next day in New York tomorrow morning above this level, that is very bullish. And this is known as an island reversal that could see the market rally on back to $70 a barrel. But as I mentioned, I'm very cautious in how to trade this market given the fact how whipsawed it's been. So it's really depending on the candle. Otherwise, I'll keep a neutral bias. Well, that's a wrap. Thank you for joining me. And as always, look out for the intraday report. And I hope you enjoy the great start to the day.